Hi there. So welcome to our next lesson, and we are continuing from where we ended on the previous video, and we were looking at the question, and I read through the question and explained everything that has to be understood in the question. So what I want to do is to go straight up to the solution and look at how we're going to present our question. But before we really attempt the question, because the requirement of the question was calculate the capital allowance claimable by Sechiwa Anam Industries Limited for the year ended 31st December 2007 using all relevant information. So we need to first calculate what our capital allowance. Then right after calculating the capital allowance, II says calculate the chargeable income of Sechiwa Anam Industries Limited for the year ended 31st December 2017. So how do we present our capital allowance? Remember, we were given the assets of the company. We were given factory building to be 800,000, plant and machinery to be 510,000. We were given office building to be 420,000. Furniture and office equipment was 60,000. Motor vehicle or motor van was 130,000, and then computers was 30,000, right? And I mentioned and explained all of these. But also during the year 2017, we were told that the company bought computers of 110,000, so that is an addition, and then they also bought a software of 20,000. So we mentioned that in the year ended 2017, we are going to be adding 130,000 to the class 1 asset, that is computers, for the year ended 2017. Then in the first note, we read that gross income of 180,000 Ghana cedis received from the leasing of one wing of the office building. The rental income portion constitutes 10% of the office building. So which means that for capital allowance purposes for the year ended 2017, when we are calculating that, we must take 10% of the office building that we have here, 420,000. We must take 10% off in order for us to calculate the capital allowance claimable for the year ended 2017. So having had this explanation and this understanding, the next thing we do is to set out our pro forma, right? So computation of capital allowance. So in a computation of our capital allowance, what do? You know, we were given the classes of assets. We were given computers as a class 1 asset. Then we were also given the issue in relation to other class 2 assets in the question. So let's look at them quickly. We were given plant and machinery there. Then also we were given motor van also there, right? So the plant and machinery and then the motor van are class 2. We're going to put them under class 2. So let's see. We are first going to work for, so let's put class 1 here, class 2 here, class 3. I'm going to bring the rest here, so don't worry about that. We are dealing with Ghana cedis. So remember that class 1 assets, the rate is 40%, reducing balance. Class 2, 30%, same reducing balance. Class 3, 20%, also reducing balance method. I hope you remember all that from our previous videos. Then we go to 2016, because remember, the information provided to us in the question was that details of the company's other fixed assets at cost are provided below. These were all acquired or constructed during the year ended to 31st December 2016. So as at 2016, these were the things that were there. So we need to bring them up at cost. The class 1 asset there is going to be the computer, which is 30,000 from the question. Alright, so 30,000. Then the class 2 assets is going to amount to the plant and machinery, which is 510, plus the motor vehicles, which is 130,000. So when we add the two, it becomes 640,000. Okay, we add the two, it becomes 640,000. Then we were also told of office furniture and office equipment, which was 60,000. That is a class 3 asset, so we bring it up. But remember in my in the previous video that I mentioned that what we are doing here is for the year ended, so let's go back to that, for the year ended 2017. But the information provided to us here, so let's look at that. We were told that the company commenced business operation on 1st April 2016, okay? So from 1st April 2016, I believe we did the workings, right? And we had 265 days, right? 275 days. So we said April, May, June, July, August, September. So April, May, June, July, August, September, October, November, December. So this is 2007, right? So April has 30 days, May 31, June 30, July 31, August 31, September 30, October 31, November 30, and then December 31, right? So from April 2016 to December 275 days. So we add all these together, it's 275 days. Now, why is this important? Because you remember that we said the capital allowance is going to be the cost base of the assets times the rate. So cost times the percentage times the number of days during the basis period under consideration divided by what? 365. So that is what we're going to be doing here. So capital allowance, okay? So this is going to be calculated as what? 30,000 times 40 times 375 divided by 365. You got that? So that is going to give us 9041. Okay? 9041. This will give us 114,658, and this will give us 9041 as well in relation to that. So that is the capital allowance. I believe you remember that. I'm not working that for you, but I've stated it for you, right? So if I want to do this, it's going to be CA. Remember I said CA is not chartered accountants, capital allowance. It's going to be 30,000 times 40% times 275 divided by 365. Sounds good? Right? So that is what you do, and that is how we will get for the capital allowance respectively for them. Then let's get the value. So when we deduct that 20,000 here, no, sorry, 20,000 959 495 342 and then 5094959. So that is the capital allowance for 2016. But remember, we are not interested in 2016, we are interested in what? 2017. But you know, we cannot calculate for 2017 without doing the workings for 2016. That is why that number of days calculation we did is very important. So now when we come to 2017, we need to look at the additions that we made during 2017. You remember that we were told that the company bought computers of 110,000, and then they bought computer software of 20,000 during the year 2017. So for class 1 assets computers, we were going to add 130,000. Then class 2 assets, were we having any addition about class 2 assets? Yes, because we were told about some maintenance issue. So let's go back to that note on the maintenance. We were told that replacement of 2 motor vehicle engine costing 51,000. Okay, so that is repair and what? Maintenance. So since that is repair and maintenance, we would have to calculate how much of that can be allowable. Now, if you remember the workings, we say that, or we mentioned that to determine how much of a repair and improvement that has to be allowed, we need to calculate what? The depreciation basis, take or the written down value of the assets, take 5% of the written down value of the assets, then we compare 5% to the written down value to the repair and maintenance, because the repair and maintenance allowable should not be above the 5% of the written down value of the assets. Remember that lesson well. So we're going to apply that principle right here, because for the class 2 assets, that is that machine, motor vehicle, engine, it's in class 2. So to calculate the kind of addition we're going to be bringing there, we would have to do that exceptional workings, right? So let me put that below here, downstairs. So repair and improvement. Repair and improvement. So what do we do? Remember, there's a class 2 asset we call in here, and so it's 30%. Then the written down value brought forward. This figure was going to be bringing up here 495,342, right? 495,342. Then what do we say? Capital allowance. Remember, this is going to be a full year. So when we do the capital allowance, 30% of this particular figure, we will get 148,603. So when we subtract or we get it down, the depreciation basis or the written down value of the asset is now going to be 346,739. So this is the written down value of the assets. Now, we will have to get 5% of this written down value, right? 5% of this written down value. So 5% of the written down value, so 5% written down value, it's going to be, so 5% of this is going to be 17,337. All right? 17,337. So I want to jump over there. So let's make sure that you can see it from there. Now, why did I leave up here? Because I'll be doing workings there. I know you're asking that. So 17,335. But then if you look at it, our repairs and improvements, put it in the middle like that, was 51,000. Then 5% of the written down value is 17,337. So remember what we said. For repair and improvement, we cannot allow more than 5% of the written down value of the assets. So even though we have incurred improvement of 51,000, we can only allow what? 17,337. Which means that we are going to be capitalizing the difference. So what does that mean? Determination of amount to be capitalized. So, total amount incurred, 51,000. Then we subtract the allowable, which is the 5% of the written down value. So amount to be expensed, which is 17,337. So when we subtract that, we're going to get 33,663. This becomes the capitalized amount, or amount to be capitalized. Sounds good? So please make sure you get this working well. When there is a repair, an improvement, we need to find out how much of that can we capitalize, as we saw in the previous examples that we did in the previous video. So right now, we can capitalize this. So the additions we're going to be bringing here, it's now going to be that figure, 33,663. Now for class 3 assets, we will not have any information about any addition. So there's not going to be any addition. So let's get the net values here. This will still be 5959. Then this will become 150,959. Then this will now be 529,005. Then we're now going to charge the capital allowance for 2017. Remember, for 2017, it's going to be a full year. Alright? For 2017, it's going to be a full year. So we're going to charge a full year depreciation. So 30% of this, 40% of this, 30% of this, 20% of this respectively. And so we're going to get 60, 384, 154, 702, and then 10, 192. So we subtract that, and we'll get a written down value, carry forward, of 90,572, 370, 303, and then 40,767. Right? So that is how we calculate the capital allowance. Now remember, we are focusing on 2017. So for class 1, 2, and 3 assets, this is what is going to happen. We're going to be adding these 3 up as the total capital allowance. But we are not done, because there was office building, and then, factory building, and then office building. Now, it will be good that we don't combine it, right? Even though they are all assets of permanent structure, and they can all be categorized in class 5 assets, in class 4 assets. Because of the office building, we are told that during the year, 10% of that was leased out. We need to separate the two, even though we have to work in the same way for them. Are you getting it? Because when you combine them, it's going to affect the way you calculate the capital allowance. So these are all class 5 assets, but we'll deal with them separately. So factory building, and kind of stretch a little bit. Then office building. Remember, these are all class 4 assets, okay? So we're going to be depreciating or calculating the capital allowance on them in that regard. Then we will also talk about the company registering a trademark, okay? Registering a trademark. So let me bring this down a little bit, so that it's out of camera. So we're going to have factory building, office building, then the trademark. Ghana cities. Now the trademark is an intangible asset, and it will be depreciated over the estimated useful life. We will claim capital allowance over the estimated useful life of it. So if we check it out, from 2016, the cost of the building was given to us as 800,000. For the office building, that was given to us as 420,000. And as at 2016, there was no trademark. Are you getting it? as of 2016, there was no trademark, because if you remember from the question, we were told that the trademark was registered during the year ended 31st December 2017. So, we're going to have our capital allowance. Remember, it is still going to be 275 days. So when we work it out, this figure times 10 times 275 divided by 365, okay? And we'll get 60,274 approximately. This one will give us 31,644 approximately. So we subtract that, there'll be nothing here, and that is going to be 739,726, and then 388,356. So these are the written down value brought forward for into 2017. So the next thing we need to go is to find out about 2017 and deal with the addition. Now in 2017, you remember that we were not told the company acquired a new building or built a new building. So there will not be any addition for the factory, no addition for the office building, but the trademark that we registered was valued as what? 80,000. When we go back to the question, you realize that we were told the company paid 75,000 for the trademark, but the legal cost incurred to complete the registration of the trademark was 75,000. So I mentioned that those two figures will be added together to give us 80,000 as intangible assets, trademark, to be treated for capital allowance purposes. Then we go to the capital allowance, CA, for the year. Now, this is a full year. So with this one, we're going to charge a full year depreciation, and this is with a straight line method. That is also one thing you need to remember. Class 4 and Class 5, because it just occurred to me, I wanted to do 10% on this, alright? Then I realized that it has to be a straight line method, so it will still be 10% on this one. So that's going to be 80,000 here. But then, when we come to the office building for the year ended 2017, we must understand what is happening here. Now the question is, what is happening here? What is happening here is that we are told that 10% of this building has been leased. So if it has been leased out and we have received some income even from that, that means it is no more 420,000. So we need to take 10% of 420,000, that is 42,000, from the 420,000, and that will give us 378,000. So it is on that 378,000 that we will do a capital allowance of 10%, which will give us 378,800. Then for the trademark 10%, it will be 8,000. Now I hope you got that working, so just say, right? Let me put it down here for you. Office equipment, office building. The office building was 420. So brought forward 420. But we have to subtract the portion that has been leased during 2017. And we are told it's 10%, so that's 42,000. So when we subtract that, the building that is left now is going to be 378,000. So for 2017, the capital allowance calculation will not be on the 420, because if we have leased out the assets, we aren't going to depreciate it any longer, or we are not using it for business purposes. As such, we cannot claim what? Capital allowance. Are you getting the idea? So we will claim capital allowance on the part of the office building that we are using as a company ourselves. And so 10% of this becomes 38,800. So when we sum it up, our written down brought forward will be equal to, this is going to be 659 726. This will be 350, 556, and this will be 72,000. So these are the workings for the first one, capital allowance. So in 2017, what is the total capital allowance we're going to be charging? It will be 60,300 here, 154,702 here, 10,192 here, 80,000 here, 37,800, and then what? 8,000. So when we sum all these up, the total capital allowance, and my board is even full, just I want to put it somewhere so that we can have it at a glance. So total capital allowance for 2017 it's going to be 355,078. 355,078. So this was what the examiner asked us to do for the I aspect of the question, calculation of capital allowance. Now I want you to make sure that you go through this very well again and you understand, most importantly, how the 2016 was worked and the 2017, the addition that came. And not only that, the issue about the repair and improvement, how we did the workings and found out the amount that can be what? Capitalized as this addition. So this thing here was a workings that we did and we came to inject it there. So this is the I aspect of the question, capital allowance. So the next thing is we will go to the II aspect of the question, where the examiner said we should calculate the chargeable income for the year ended 2017. So let's see how we calculate the chargeable income. So let's see how we calculate that. I hope you got that right. So let me soup up my board, then we continue. Yeah, I can clean everything.